Gold is everywhere in the headlines right now.
Gold. This month, the yellow metal has been on a stunning rally.
End of January this year, gold's price reached a new record high before dropping again. But if we zoom out and look at gold's price in the last 5 years, that is still extremely high. Central banks are buying gold, reducing their reliance on fiat currencies, especially the US dollar. Political uncertainty, geopolitical tensions, and inflation fears are or have fueled a rush into gold. And whenever an asset keeps hitting new highs, it creates one really powerful emotion: FOMO. But here's the real question. Just because gold is going up, does that mean that you should buy it? Let's break this down today so in the end you can make the best decision for yourself. Let's talk about gold versus stocks over the long run, what actually grows your wealth, what gold does in a crash, does it really protect you, gold versus inflation, is it really a hedge or a myth? And later on I'll also share with you how much gold I'm personally planning to hold. Now, some of these answers might surprise you because the real answer isn't gold good, gold bad, it's what exactly are you expecting gold to do for you? If you've been here for a while, you know my default investing strategy. Basically, index ETFs, something like the VFV or VOO, some stocks, and also Bitcoin. This is a whole different topic, but those of you interested can join me later in this video here. For the longest time, I always wanted to invest some money in gold. My grandfather saved his hard-earned money in gold, he believed in it, and so do people across cultures. Indian households, for example, hold $3.8 trillion in gold. Gold is basically the universal symbol for safety. But for me, it always felt too complicated to buy. Traditionally in Canada, you either bought physical bars if you could afford to buy them, or coins and store them yourself, or buy a gold ETF where you don't personally hold the metal. But recently, buying physical gold got much easier. With this app called Wealthsimple, there's a link to it in the descriptions below, you can buy physically backed gold online very easily, the same way you buy a stock, and I explain how in a bit. Now, let's first talk about whether you can really rely on gold to become rich, or at least grow your wealth. Quick disclaimer, guys, this is not financial advice, this is education and entertainment and about how I personally think about setting up a portfolio. So I'm not telling you what to buy, whether you should buy or not. So always do your research and decide based on your personal situations and goals, and consult a financial advisor if needed. Now that we got that out of the way, let's get back to the question of whether gold will make you rich, or if at least it will outperform stocks. Is it really a better option than stocks, and should you possibly reroute your investments into gold? Now, an important thing to understand about the difference between gold and stocks is that gold is not a growth asset the way stocks are. It doesn't pay dividends. There are no earnings, no cash flows. Gold's returns depend mainly on what the next person will pay for it. Stocks are different. You're buying ownership in businesses that can grow profits over time. That profit engine is why on average stocks and ETFs like the VFV or VOO that mirror the S&P 500 have historically grown more, note over very long time periods, than assets that don't produce cash flows. Whether stocks or gold perform better really depends on the time frame we're looking at. Sure, if we look at the most recent timeline, gold has outperformed stocks greatly. That's also one reason why so many people are suddenly paying attention to gold again. Let's look at this tool from long-term trends. This yellow line here shows gold's price development over the last year, while the blue line shows stocks, specifically the S&P 500, which contains the US's 500 largest company stocks. And looking at the last year alone, gold is clearly soaring above it. And even if we zoom out and look at gold's price movement since the 2000s, it still grew more than the S&P 500. So your portfolio would have grown faster if you held gold consistently throughout that time. However, if you'd started investing in the 90s, you'll get a totally different picture. If you'd started investing in the 90s and held until now, you'd be better off investing in the S&P 500. So you can see how we cannot put a blank statement on whether gold or stocks are the better investment purely based on historical performance. And the thing is that going forward, we can't say by default either whether the S&P 500 or gold will grow your wealth faster. Again, it will depend for one on your holding period, and second, it goes without saying that no one can predict the future. Even experts have been wrong again and again on all of their predictions. So where does that leave us, average investors like you and me who just want to get ahead financially? Personally, despite the recent surge in gold price, I still prefer holding more stocks than gold. Although investing in gold has its merits, I'm not going to just divert all my investments into gold. Personally, I am not going to rely on gold to maximize the long-term growth of my portfolio. But more about what I plan to do later. Now, what about buying gold because it's a safe haven like many people believe? Is it actually true? Gold can help in stressful periods of the stock market when the stock market crashes. Having some gold in your portfolio can sometimes, I stress sometimes, dampen losses, but it is not a perfect crash shield. Let's take a closer look at the research around gold's purported safe haven behavior. For example, WisdomTree looked at the 20 worst quarters for the S&P 500 since 1967 and found gold was positive in 15 of of those 20. In those time periods, gold could have potentially buffered against some of your other losses. The question is though, what about the other quarters? During these quarters, gold actually had a negative performance. So what does that mean? It means that gold can sometimes balance out your portfolio so you're not hit as hard during stock market downturns, but as gold too has its up and downs, holding it in your portfolio doesn't eliminate risk entirely. What you cannot expect, for example, is that each time stocks go down 30%, gold will automatically shoot up, let's say by 30% as well. That would be a gross oversimplification of how gold works. Quick question, guys, where do you think gold's price will go next? Are you thinking of buying gold for short-term gains or holding it long-term in your portfolio? I'd really love to know. Now, if gold is not that perfect investment some people advertise it is, then why has gold survived for thousands of years and is still so popular until this day? Gold has a key characteristic that US dollars or any other fiat currency, which simply means currency printed by a government, doesn't have, which is it can't be printed the way fiat currency can. Gold's popularity has lasted for centuries because it's scarce, hard and expensive to mine, durable, portable, although we should add it's difficult and expensive to transport in large quantities, globally recognized, and also, if you're concerned about control, gold is not specifically tied to any company or government the way stocks or dollars are. And over long stretches of time, gold has preserved purchasing power, somewhat at least. Let's look at this example of gold's purchasing power when it comes to buying a house in Canada. On the chart here, the dark line represents the price of a benchmark home in Canada from 1979 to 2025. Unmistakingly, the price has gone up like crazy, making it almost impossible for the average wage earner to buy a decent home. Now look at the yellow line. This represents the price of a benchmark home in gold. So how much gold do you need to buy a home? In 2025, the average price of a single family home in Canada was approximately $738,000. Over that same year, gold averaged roughly $4,800 per ounce. Based on those figures, it would take about 150 ounces of gold to buy the average single family Canadian home today. That works out to just under 5 kilograms of gold, or roughly 5 standard 1 kilogram gold bars. Now let's look at Canada's average house price in 1925. In 1925, a typical Canadian home cost about $5,000. At that time, gold was priced at roughly $20.67 per ounce under the gold standard. That means it would have taken around 240 ounces of gold to buy a Canadian home in 1925. And that works out to be a bit more than 7 kilograms of gold to buy a Canadian home in 1925. These numbers are, of course, approximations based on medians or benchmark prices of a typical home and assuming a very specific point in time when you bought or are buying a home now. But at least on a very high level, we can say that if your grandmother held gold in 1925 and she passed it on to you, her grandchild, then with that gold, you would be able to buy roughly the same home she could back then. But here's the reason why it's not that simple. Over the very long term, yes, gold can help as an inflation hedge. But over the medium term, let's just look at this gold price chart of the last 20 years again, you'll see that there were times of great volatility as well. While gold's price rose over these 20 years, in between there were periods of brutal downturns as well. So if you bought at a time when it was high and needed to sell after 5 years when the price happened to be low, you'd be in a very difficult position. So in summary, I'd say that in the long term, gold can be useful as an inflation hedge, in the long term as a store of value, but in the short to medium term, it can only somewhat preserve your purchasing power. Let me know in the comments, guys, what do you think? Does this make sense? I'd really love to know. After all that being said, what plans do I have personally with gold and how much am I planning to hold? Again, guys, this is just what I am doing. Do not just copy me because I am not an expert or financial advisor, but I'm just a YouTuber sharing my thoughts and experiences here. So personally, I am not going to rely on gold to become wealthy. For me, it takes more than that. It takes 1, a solid income stream that outpaces inflation over the years, and 2, investing into growth assets. Also, I know some of you watching hate to hear about this, but for full transparency, I have to tell you that I also heavily invest in Bitcoin. Just hear me out for a second. If you think that gold is great, then once you learn more about Bitcoin, you will understand why Bitcoin is not some scam, but that it's even better than gold. Here's just one simple reason. Contrary to what many people believe, gold is not a limited resource, meaning that yes, more gold can be mined when there is demand. Bitcoin's biggest strength, on the other hand, is that it has an absolute limited supply. It is hard capped at 21 million coins. Anyway, this video is not about Bitcoin. I just had to mention it. If you want to learn more about Bitcoin, you can join me on my new channel, Satoshis to Bitcoin. So for me, gold is just one tool I use to diversify my portfolio. My personal target is a single-digit percentage of gold in my portfolio, not even close to 10%. It's just a kind of seatbelt that will help me through some of the turbulence. Now, you need to decide for yourself what that percentage should be, whether that's 20%, 10%, or even 0%. And I'll give you a short checklist in the end to help you decide. Now, for those of you who have decided to buy gold and are wondering how to do that easily in Canada, I want to share with you how I do it. Recently, I started buying physical gold, physically backed gold through this platform called Wealthsimple. It's a super easy to use, practically no fee investment platform. It's easy, you just need to open an account, then you can immediately start buying gold coins on the app. Once you reach a 10th ounce, that's the smallest coin, you can redeem it, so Wealthsimple will actually send you the physical coin to hold. But you do not have to redeem it, you can also just let Wealthsimple hold it for you. Also, if you don't have the money to buy 1 ounce or even a 10th of an ounce, you can just buy a certain dollar amount, for example, just $100 worth of gold, and Wealthsimple will translate that into ounces for you. What's also great about buying gold on Wealthsimple is that if things change or your strategy changes, you can easily sell your gold on the platform or move it around completely online. I've put the link in the description down below just in case you want to check it out. And if you use my affiliate link to open your account, you can even get a $25 bonus straight into your account just by funding it with $1. Also, if you want more information on how Wealthsimple's physical backed gold feature works, you can watch this video later. So there are some pointers or questions to help you decide whether or not and how much to invest in gold. What is your motivation to invest in gold? Make sure that you're not just following the hype or reacting to headlines, but that you have a plan. How long are you planning to hold gold? If it's just for short-term gains, then you could succeed, but you could also be left disappointed when the price suddenly drops. There's a lot of speculation in the market right now, after all. And if you buy gold, how long can you hang on to it? Hopefully long enough so that it can somewhat buffer your portfolio against possible other losses. Also consider this, any money you invest in gold, you cannot invest in other assets, including growth assets. So I'm not telling you to stay away from gold or to invest in it, I'm just saying that it's really important to consider what you want to have in your investment portfolio and find the right percentage allocation for gold for you personally. Now, I hope that this has somewhat helped you to decide how you want to go about gold. Now, if you're new to investing and want to take a step back and learn about the basics of investing, then you can join me in this video next.